Indiacharts publishes Nifty daily video updates, the weekly Elliottwave outlook, and the long-shot report covering all asset classes.
So as of yesterday, it looked like wave 5 had started, and what I would have ended up marking is this as minor 1, 2, and we should have continued in wave 5 over here. But the failure to get past the 12,000 mark can also mean that what we are completing is a larger 5 wave in wave 1 of 5. Okay, so this is just the first wave of the larger move up, and we may pull back in 2 of 5. So this is the risk right now in the short term. And further confirmation for this is breaking the swing lows here, which is 11,825, 11,822. If we break the wave 4 low at 822, then possibly we've started a wave 2 pullback at larger degree. And if that is true, then we should look for either a 23% or a 38% retracement. 23% retracement would mean 11,734. 38% retracement would mean coming back to 11,560, which would be pretty steep. So these are the two possibilities, and we do see some precedence to this. I had written last week, that this move has completed a 6-7 day rally, and every time after that markets tend to pause, and that we've seen throughout the first and third waves earlier in this structure, 6-7 day or 8 day rallies and then a pullback. And the second waves have been deep. So wave 2 of 1 also here was a deep retracement. Wave 2 of 3 also was a deep retracement. So let's not rule that out. So we'll have to be a little open that after a 6-7 day move, the market just wants to pause or pull back. And we've seen this here throughout. Even this 5-day move pulled back, 5-day move, and so 5-6 day rallies saw these retracements or pullbacks happening over and over again. This time it had been a pretty strong move, so I was not initially anticipating it. But now that I can mark 1, 2, 3, 4, and 5, the risk is open that this could happen. So if this breaks, be open to a slightly deeper cutback. The same thing is also visible a little bit with some variation on the Bank Nifty, which actually appears a little stronger, because Bank Nifty so far has pulled back to the 20-hour average, not gone all the way down below the 40-hour like the Nifty. And so the 20-hour average is at 23,604. A close below 23,604 would also be another way of confirming that Bank Nifty is giving up and joining the Nifty into a wave 2 correction. So this ABC pullback would end up being wave 4, and the fifth would have truncated as a double top here, and then we are getting a pullback to the entire 5. So in case of the Bank Nifty, when we go to the daily chart, I discussed this yesterday, this entire move could end up being wave 1 of 3. This pullback then would be 2 of 3, and then eventually we'll get 3 of 3 later on. Now this fifth of the first did not even surpass by a few points the high, same in Nifty. It's in Nifty it's nearly a double top, in Bank Nifty it's a slightly mildly lower high. But the hourly chart clearly makes it look like a 5-wave rise. The fall here in the fourth was ABC, and then you got this impulsive push. So this is a 5-wave move. We are going to watch out if it becomes a larger retracement. If you do get a break below the 20-hour, first thing is Bank Nifty will retest the swing low, 23,149, and then the risk is for a further retracement if that happens, which can mean 23% or 38%. So 38% would then be 22,744.